Are you sitting on some savings wondering where to put your money? Maybe you've got a few $1,000s burning a hole in your pocket. But every time you think about investing, you feel overwhelmed by all the options. Stocks, bonds, crypto, real estate, precious metals. The list seems endless and frankly terrifying. What if you lose everything you've worked so hard to save? Well, you're in the right place. I'm here to cut through all the noise and give you the ultimate roadmap to smart investing that actually works. By the end of this video, you'll understand exactly how to grow your wealth safely and systematically, without falling for get-rich-quick schemes or losing sleep over market volatility. Welcome to Wealthcraft, where we help you master your money. I'm breaking this guide into 4 essential parts. First, we'll cover the fundamental principles every investor must understand. Second, I'll show you the proven strategy that's made more millionaires than any other investment approach. Third, we'll tackle your biggest fears about investing and why they're probably holding you back unnecessarily. And finally, I'll reveal an alternative wealth-building strategy that could accelerate your financial freedom by decades. Part 1. The foundation of wealth building. Let's start with a hard truth. If your money isn't growing, it's actually shrinking. Here's what I mean. Imagine you have $5,000 sitting in your checking account right now. You might think that money is safe, but there's an invisible thief stealing from you every single day: inflation. That $5,000 might buy you a decent used car today, but in 10 years, that same car could cost $7,000 or $8,000. Your money didn't disappear, but its purchasing power did. This is why the wealthy never keep large amounts of cash sitting idle. They understand that money must work to maintain its value. So how does money actually grow? There are fundamentally 2 ways any investment can make you money. First, through appreciation. You buy something for one price and sell it later for a higher price. Think of buying a vintage guitar for $500 and selling it years later for $1,500. Second, through income generation, your investment pays you regularly while you own it. Real estate is the perfect example of both. You can buy a rental property that generates monthly rental income, while the property itself hopefully increases in value over time. But here's the thing. Real estate requires significant capital, ongoing management, and carries substantial risks. For most people starting their wealth-building journey, there's a much better option. The stock market offers the same dual benefit, but with much lower barriers to entry. When you buy shares in a company, you're purchasing a piece of that business. If the company grows and becomes more valuable, your shares become more valuable too. Plus, many companies pay dividends, essentially sharing their profits with shareholders. But here's where most people get overwhelmed. There are thousands of publicly traded companies. How do you choose? Should you buy Apple, Amazon, some hot new tech startup? This is where most beginners make their first critical mistake. Part 2. The Millionaire Maker Strategy. Here's a secret that Wall Street doesn't want you to know. You don't need to pick individual stocks to build serious wealth. In fact, trying to pick winning stocks is one of the fastest ways to lose money as a beginner. Let me introduce you to index fund investing, the strategy that's created more millionaires than any other investment approach. An index fund is like buying a slice of the entire market instead of betting on individual companies. Think of it this way, instead of trying to pick the winning horse in a race, you're betting on the entire horse racing industry. The S&P 500, for example, represents the 500 largest companies in America. When you invest in an S&P 500 index fund, you're essentially buying tiny pieces of Apple, Microsoft, Amazon, Google, and 496 other major companies all at once. Here's why this is brilliant. You don't need to be a financial genius to succeed. You don't need to analyze company reports, predict market trends, or time your purchases perfectly. You're simply betting that American businesses, as a whole, will continue to grow and innovate over time. And historically, this bet has paid off incredibly well. Over the past century, the stock market has averaged about 10% annual returns. That might not sound exciting, but here's where compound interest becomes your best friend. If you invest just $500 per month in an index fund averaging 10% returns, you'll have over $1.3 million after 30 years. But what about those financial experts on TV picking hot stocks? Here's another secret. Most professional fund managers can't beat the market consistently. Studies show that over 90% of actively managed funds fail to outperform simple index funds over long periods. Even Warren Buffett, arguably the greatest investor of all time, recommends index funds for most people. The beauty of index fund investing is its simplicity. You're not trying to outsmart the market, you're joining it. You're not gambling on individual companies. You're investing in human innovation and economic progress. Now let's address the elephant in the room, the fear of losing money. This fear keeps millions of people on the sidelines, watching inflation slowly erode their savings while they wait for the perfect time to invest. The biggest fear I hear is, what if the market crashes right after I invest? It's a valid concern, but let's put it in perspective. Yes, markets do crash. In 2008, the S&P 500 dropped about 37%. In 2020, it fell 34% in just a few weeks. Scary numbers, right? But here's what the fearmongers don't tell you. Markets also recover. That 2008 crash, the market fully recovered by 2013 and then continued to new highs. The 2020 crash recovered in just 5 months. If you had invested at the worst possible time, right before each crash, and simply held on, you'd still be significantly ahead today. This is why time in the market beats timing the market. The longer you stay invested, the more likely you are to see positive returns. There has never been a 20-year period where the S&P 500 produced negative returns. Never. Another common fear. What if I don't have enough money to start? Good news. You can start investing with as little as $100, sometimes even less. Many brokerages now offer fractional shares, meaning you can buy a piece of expensive stocks like Amazon or Google with just a few dollars. The key is starting, even if it's small. Investing $50 per month is infinitely better than investing $0 per month while you wait to have more money. Remember, every wealthy person started with their first dollar invested. Part 4. The fast lane to financial freedom. Everything we've discussed so far is what I call slow lane wealth building. It's reliable, it works, but it takes decades to build serious wealth. What if I told you there's a faster way? The fastest way to build wealth isn't through the stock market, it's through investing in yourself and your own income-generating ability. Think about it. The S&P 500 might give you 10% annual returns, but what if you could increase your income by 50% or 100% in the next year? Let's say you're earning $50,000 annually. Investing in a course, certification, or skill that helps you earn $75,000 next year gives you an immediate $25,000 return on a much smaller investment. That's a return percentage that no stock market investment can match. This could mean learning digital marketing to freelance on the side, getting a professional certification in your field, or developing skills that qualify you for higher-paying positions. The return on investment in yourself is almost always higher than any financial market. The ultimate fast lane? Starting your own business. This doesn't mean quitting your job tomorrow to open a restaurant. It could be as simple as starting a side business online, creating digital products, or offering services in your area of expertise. Here's my recommendation. Use both strategies. Invest consistently in index funds for your foundation. This is your safety net and long-term wealth builder. But also invest in yourself and consider starting a side business for acceleration. So here's your step-by-step action plan. First, open an investment account with a reputable broker. Look for one with low fees and access to index funds. Second, start with just $100 if that's all you have, but start today. Third, set up automatic monthly investments. Even $50 per month makes a difference. Fourth, choose a broad market index fund like the S&P 500 for simplicity and diversification. Fifth, ignore the daily market noise. Don't check your account every day. Invest consistently regardless of whether the market is up or down. Sixth, gradually increase your investment amount as your income grows. And finally, consider investing in yourself through education, skills, or a side business for faster wealth acceleration. Remember, the goal isn't to get rich quick, it's to get rich for sure. Index fund investing combined with personal development creates a powerful wealth-building combination that's worked for millions of people. The best time to plant a tree was 20 years ago. The second best time is today. Your future wealthy self is counting on the decisions you make right now. If this video helped clarify your investment strategy, smash that like button and subscribe to Wealthcraft for more money mastery content. Drop a comment below telling me what's been your biggest barrier to starting investing. I read every single comment and often create videos based on your questions. Remember, at Wealthcraft, we don't just talk about money, we help you master it. Until next time, keep building your wealth systematically and intelligently.